Assalamualaikum and good morning to everyone who is tuned in to this morning's webinar. We hope everyone is well and keeping safe. My name is Lisa and I will be your MC for today. Thank you for joining us again in the second session of the Financial Literacy webinar series. This morning's webinar is titled Hann and Suraya Personal Finance ChitChat, organised by Bank Negara Malaysia, the co-chair of the Financial Education Network, or FEN. Ladies and gentlemen, this morning's session is going to be a very fun session as we have two well-known personal finance experts and social media influencers who run their own financial education platforms to educate and reach out to Malaysians on financial planning and management matters. Hann is a certified financial planner and the co-founder of ringgitplus.com. He is also a financial geek. His love for statistics and money drives his passion to help others navigate the world of personal finance. His famous motto, "I will never tell you how to stop living the way you want to, but let me guide how you can maximize it and make your money work harder for you." He also blogs at #SaveMoneyWithHann. And we have Suraya, who is a writer, speaker, and founder of the personal finance website ringgit.com. Her goal is to make personal finance education simple and fun. Ladies and gentlemen, we hope you will find this session interesting and beneficial. And most importantly, we hope you will gain practical tips from Hann and Suraya. This session will be interactive as it will be driven by the questions that you have submitted earlier to both Hann and Suraya. But worry not, you can still submit your questions to Hann and Suraya via Slido/FinChat, or alternatively, you can scan the QR code on the screen. Both this information will be on your screen throughout the session. Lastly, to help us improve the content of the webinar in the future, we would appreciate it if you can spend some time to fill up the feedback form at www.fenetwork.my/feedback at the end of this session. Ladies and gentlemen, now with much honor, I would like to welcome our distinguished and esteemed speakers for today's session. Encik Han Liu, co-founder Ringgit Plus, and Cik Suraya Zainuddin, founder from ringgit.com.
Good morning, Malaysia. Hope you're having a lovely Wednesday morning. Welcome to the second live webinar that has been organized by the Financial Education Network in conjunction with Financial Literacy Month 2020 in October. Today we're doing something a little bit different. We've got Suraya here from ringgit.com. Morning, Suraya.
Good morning.
For the people that are joining us for the second time, welcome back. And for the people who are just tuning in today, hope we're able to have a quick chat around personal finances. The title of this second session is #Hann Suraya. That's myself and Suraya, Personal Finance ChitChat. So hopefully you'll be able to learn a couple of things that helps with your personal money during this time. Again, as per the first session, if you've got any questions for us during the session, please feel free to scan the QR code right at the bottom right-hand corner of the screen. It comes up periodically. It should come up right about there. And we'll be happy to take them off Slido at the end of the session, answer all your questions. But let's just get straight into it. Morning, Suraya.
Good morning, Han.
So I guess let's set the scene for today, which
Yes.
is personal money. If you could give us a quick introduction to yourself. Lisa's happily done it earlier, but if you could tell the audience, who you are and what you stand for and what you believe in when it comes to money.
Sure. Okay, so morning, Malaysia. You probably know me as the writer from ringgit.com. That's why I write articles about personal finance. My background is communications. And basically, in a nutshell, I'm a personal finance enthusiast. That just means that I love everything that is to know about money, and especially from the behavior side. How about you?
Cool. Thanks for I'm Han. I forgot to introduce myself. I'm Han. I'm co-founder at ringgitplus.com. Ringgit Plus is Malaysia's #1 financial product comparison platform. We also hope to, before people go and get financial products, to get themselves educated beforehand. We've helped over 1 million Malaysians over the last 8 years, so it's been a while. But today I'm particularly excited to talk to you because we can't ignore the situation financially that Malaysia is in, right? Again, COVID-19 has been the big theme of 2020, and most people have been focused on the health aspect of COVID-19, but lurking in the background is the financial impact to households and consumers of COVID-19, and in particular Malaysia, the various MCOs that we've been having impacting finances. We've done lots of surveys, you know this, and every time we survey Malaysians, we kind of try and figure out how they're doing with their finances. And lately, what we find with the latest surveys that we've done, the Ringgit Plus Financial Literacy Survey 2020, some scary statistics, right? More than half of people aren't able to save money in a month. 16% of Malaysians aren't prepared to restart their installment payments in October for their loans. Lots of people, over 70%, are worried about their retirement. So, painting not the rosiest picture, but for me, I love to know, before we get into Q&A, what do you think about this situation for Malaysians? What are the kind of stories that are coming to you from your followers about how they're managing their money during this time?
Okay, so basically, right, the Ringgit audience have been generous enough to share their knowledge with me about how the pandemic has been affecting them, and obviously different people have very different stories. Some people are doing really well, some people are not doing so well. So people who have lost their jobs, or people who had pay cuts, and I think this one is backed up by studies and statistics as well, they can't really save up, and it's really it's easy to forget that amid all the statistics, but it's really tough for some people. As for myself, I'm happy to say that I'm doing okay, but there comes another side of financial behavior, which is something that I don't even think deserves to be mentioned sometimes, which is survivor's guilt. It's something that I came across and I thought would be an interesting thing to talk about, because people who do have enough savings and still want to maintain, their long-term plans in terms of like saving money every single month, when you go in social media and you come across all the donation calls, right? And you see stories of how people are struggling, can't eat, facing medical issues, and then slowly you just have to be aware that the first thing that comes to mind is, oh, I'm so glad that I'm doing okay. And then comes the, how dare you compare yourself to people who are not doing well, and using them as like a pseudo inspirational story. So there comes the, I guess, guilt as well.
Okay, so lots of guilt, but lots of not satisfaction, I guess, a bit of comfort that, look, I'm doing okay, but I'm seeing a lot of scary stories out there, and I'm feeling a little bit guilty for feeling okay. That's the kind of message.
Kind of.
Yeah, I get it. I mean, on our side, we're seeing a lot of people feeding back to us, saying that they've lost their jobs, they've lost their income, they need help, they need a temporary loan to help them through the situation. So for us, it's a very, very dear topic to our heart at Ringgit Plus. That if some people need a leg up, hopefully people like us are there for them, and then subsequently the banks. But let's get into the meat of this session, right? You're not here to talk about how bad or how good things are out there, right? We're here to talk about your questions, right? And over the last week or so, Suraya and I have posted on our social media profiles and our own on what questions you have for us when it comes to personal finance, and we put them all in this little bowl here. Suraya, why don't you go first, and we'll get right to it, start answering some questions, the questions that you guys have posted us.
Yes, thank you so much everyone who posted your questions. We have added them into this bowl, and we're going to try and answer as many as possible, starting from this one. Okay. Straight off the bat, what financial myth do you want to address? financial myth?
Okay. There are so many, by the way, but the main one that comes to mind is that you need to be rich to be able to do financial management, right? And a lot of people, when we say, hey, look, you've got to, the more you look after your money, the more you look after yourselves. It's not just about your health during this time, it's actually about your financial health. And the response we always get is, well, I'm not rich enough to worry about money matters, right? But the big myth is that you don't have to be rich to manage your money better, right? It doesn't matter who you are. You can be, a big CEO of a corporation. You can be a gig worker. You can be a student. You can be someone working in an office. There's no such thing as I'm not rich enough to manage my money better. What do you think? What's your thoughts on that one?
I love your answer, and that's a message of self-determination, which we get a lot. That you can do it. A lot of people do have a lot of confidence issues with their money management. I know a lot of people, especially women, have come up to me and say that, I'm not as good. I'm not doing this well. And that does happen. People also face a lot of, motivation issue when they try different things and it doesn't really work as well as they think it should. Then they kind of give up, and then there goes the cycle of disappointment. But maybe one financial myth that I do want to address right now is that you can do it all by yourself. It's okay to get help, and there's a lot of help out there. It is also perhaps another myth that your environment doesn't matter, like you can just do it on your own. For example, if your partner is a spender, then you are more likely to be a spender, right? Your partner or your family or your colleagues. How many of us see, our colleagues sharing things with us and say, oh, that's nice, I want to get it too. That happens a lot. And other things that would be considered under this whole environment umbrella would be even your, where you work. If you have a lot of distractions going on, then you are less likely to be able to focus on work. So see which part of your environment you can make more efficient and be better for your own financial mindset.
I love those two things, right? You mentioned self-determination, you mentioned a myth is that your environment determines how you manage money. And I think, if the one message from this question is, take control. It's your money. It's not someone else's money. It's your money or your family's money between you and your spouse or children. Take control of it. It's yours, right? I think I love that very much. I'm going to go and ask you a question now, Suraya. But if you didn't manage to get your questions to us in the last couple of days, please feel free to just ask us right now by scanning the QR code that appears from time to time at the bottom right-hand corner of the screen. We'll pick it up right at the end once we're through with a bunch of these, but I'll get straight right into it. Okay, this one is on life insurance, right? Two questions here, part of life insurance. The first one is investment-linked life insurance plans worse compared to classic life insurance plans? And second, how do I know whether the insurance plan, whether it's life or medical, is suitable for me? What are the key things I need to look at?
Okay. First of all, BNM is planning another webinar on Friday, correct? Specifically talking about insurance. And you should totally tune that one so that they can give you a more in-depth answer. But whether or not it is important, yes, of course, all of that is important. I can't speak for anyone else, but I do have medical insurance and personal accident, and I am also planning to get critical illness and a more comprehensive one. So it is something that I think a lot of people who are healthy take for granted. Now that I'm getting older, experience helps, right? I should probably get on to that. It's just, I have talked to my financial planner and we're getting right on it.
Okay. No, I like that very much, right? Most people assume that young people don't care about insurance, but I think if you go back to what insurance is for, actually it's more for young people. Why? Because insurance should be to protect you if you aren't able to earn, right? So, or protect you or your family. So if you're not able to earn for whatever reason, death, illness, injury, insurance is there. Like if you're extremely wealthy, you may not need insurance because you have that wealth from kind of a long career of earning money to withstand this kind of surprises. But insurance is actually for young people, right? Because we're at the start of our careers frequently, we're starting to build our wealth. It's not quite enough to withstand those shocks, right? But one thing I hope, I mean, just to add to your answer, Suraya, is I like to think that insurance is for that, right? Insurance is for insurance, investment is for investment, right? So if you're going to get insurance. And if that hopefully answers the B part of that question, which is what should I look out for? Sum assured is the insurance term that's being used, but essentially it's how much you get paid if something bad happens to you. That's the key thing to look out for if you're getting insurance, rather than investment returns. Because again, insurance is for insurance, investment is for investment. So that's hopefully.
Can I add on a little bit about life insurance, right? And this is totally the credit of another financial KOL, but he says that if you are, please don't trust anyone, but if you are Chinese, please get life insurance because your funeral expenses are very expensive. Don't burden your family when you die. Yeah.
Having attended some of those, I know exactly what he means.
Yeah.
Your turn. Okay. Go for it.
Yeah, let's go with this one. This one is in Malay. Sebab saya baru receive scholarship and I'm thinking of investing the money into ASB robo-advisory goal. So I think this question is about what to do with scholarship money.
I should probably pass this to you, but my answer on this is quite simple, which is depends. If you're supposed to use the money to pay your school fees and your living expenses, you should probably do that. But I'm guessing the question is this person's already paid for those things, and the scholarship money is literally a boon or essentially a bonus that's now sitting in their hands. I'd say probably a student, so probably a young person, probably might want to look at doing two things in this order. Build up an emergency savings pool just in case something bad like COVID-19 happens. Or if you already have that, start thinking long-term about your kind of long-term investment portfolio. There's no better time to start than right now, right? Which is as early as possible. Second best time right now.
Correct.
What do you think?
I think that this person I admire this person because she thinks ahead. When I was a student, I wasn't even thinking of investment. So this is an amazing question. But you're absolutely right. Scholarship money shouldn't, your first thought with scholarship money is that shouldn't I should be investing it. But that said, there are ways of saving/investing it in low risk places. So if it's, somewhere like, I think ASB is quite safe-ish. High interest banking account is quite safe. Can just park it there while you focus on your studies.
Yeah, okay, so studies first, and you can do some saving and investing on the side. That's, okay, my turn now. Okay, next question. This is an interesting one. Should be relevant for many people. What's the most reliable way for me to pay off my credit card debt? And the reason why this person is asking is they've accumulated a lot of balance across a few credit cards, and they're barely staying afloat by just paying the minimum payment. So what's the best way to just handle that?
Okay, there's this one huge US-based financial guru. His name is Dave Ramsey. He's problematic for a lot of things, but one thing that he does share very well is methods of paying off debt. There are a few actually. Because this one is come from US home. There's a snowball method, there's the avalanche method, and something that I've known recently is the snowstorm blizzard method. So go look up all of these natural calamities and see which one fits you. Yeah. But generally speaking, most people find a lot of motivation to keep track with their debt paying schedule when they do the snowball method. So I don't want to expand too much about what it is. It's something that can find online. Just Google snowball method and see if it works for you.
Okay, no, I'm familiar with all those calamities as well. But I mean, for me, I tend to side more with the avalanche method, which is less of a mental thing. It's more of an actual numbers thing. For example, you pay off the most expensive ones first. So easy one. You're struggling to pay off all your your credit cards, you're paying the minimum across all. You have a little bit of money, what do you do? Do you just raise the minimum payment across? I wouldn't do that. I'll use the avalanche method, which is pay the expensive one first, right? If something is at 18% versus 12%, pay the 18 one first. Why? Because this is cheaper technically, right? So that's one way. The second way is, why not consolidate all that credit card debt into one bigger but hopefully cheaper loan, right? And that the same minimum payment that you make can be used towards paying down that loan rather than staying afloat at 12 to 15 to 18% interest. Loans today that do that kind of consolidation are in the single-digit category in terms of interest rates. So somewhere between 4 to 8% right now, depending on who you are. That itself is lower than a credit card, right? So you can save some money and still start paying off your loans that way. So that's kind of how I would look at it.
This is one of the services that AKPK offers, right?
It is.
For some people.
It is, but you don't have to go to AKPK to
Correct.
do that. Yeah. So AKPK is where you go if you have no else to turn to. The first thing to do is you already have credit cards, right? Which means you already speak to your bank every month by way of paying them, right? So why not speak to them while you're paying them, saying, hey, look, I'm paying you, you, and you. Can any of the three of you, or is it few credit cards, right? Any of the few of you offer me a loan which allows me to pay this off at a much lower rate? Give it to me. Otherwise, I'm going to the next bank, which I also have a relationship with.
Wow, very
right? And
very garang, I love it.
And you start doing that, and just start chopping down your interest rates, right? Go from 12 to 15 to 4 to 8, right? And immediately that gives you a sense. I mean, just to give you a sense, if you can save 10% a year of 10,000 ringgit, that's 1,000 ringgit extra, which is either in your pocket or used to pay down those loans, right? So for me, that's a nice, easy one.
Follow what he says. Next one.
Next one.
Then, okay. Oh. Any interesting stories from your followers on how they manage money during COVID-19 and MCOs? Any lessons learned to motivate us?
Ooh, lots of stories. But the one that comes to mind, during the last kind of 7 months of COVID-19 / all kinds of letters, MCO, was that people were able to start building up emergency funds during this time. Partly because they were recipients of the blanket moratorium, which for me that excites me, because if you're able to start building up an emergency fund now, that protects you from future crises that might happen, which may not be covered by the insurance stuff that we're talking about earlier, right? So not everything can be covered by insurance. For example, job loss. For example, certain medical things that may not be covered. For example, things that happen to your house because maybe you made it happen rather than something breaking down. Things like that. And for me, that gives me a lot of hope that if you're able to build something as a result, build an emergency fund as a result, you'll be more resilient going forward. So that's one story. The other story that's quite interesting is that people realize that actually I don't need much to be happy, right? Right? They're saying, oh no, my expenses used to be 8,000 a month, really really high expenses, and lately I found a lot of joy watching YouTube and learning new stuff, and not really going out and spending too much. And I'm able to save because of that. I think those are kind of two really positive stories that made me feel pretty good and positive about a very not so positive situation. But you've got surely some good stories to share.
I do want to share one specific story. Shout out to you, Hidayah, if you're watching. This person, during the start of the pandemic, a lot of people were in the gaps of receiving help, right? In neighborhoods. There's a very big Facebook group called Caremongering, and what they do is they help out members of society who need help, either that's food or cash or any type of assistance. And she's a very helpful member in terms of organizing. So I find it very inspiring that this person you can really see the flick of it's the fight or flight response, right? And she fought. And during the course of this pandemic, she have organized stuff, and she also started a side business selling masks, and she has saved up, I believe, 50K of emergency money during the pandemic. So you can see how I refuse to take this bad things. I will fight tooth and nail to get ahead, and I love that a lot about her.
No, I think that's a lovely story. I think there's a lesson there too, right? Which is, it's very easy to sit down and think,
There's nothing
I can do. The virus is out there. My income is affected. I can't go out and work because I'm stuck at home. Or you fight.
You fight.
I love that. I love that very much. Cool. Let's move on. Next question. Okay, this one should be relevant to all of us. I'm in my 30s and I'm thinking of buying my first home, sorry. But I'm not comfortable to be in debt for 30 years. There's no question in there. There's just thinking, there's a statement on thinking of buying a property and statement on not being comfortable being in debt for 30 years. So I'm guessing she's talking about home loans, or she or he is talking about home loans. What do you reckon, Suraya?
Okay. The peer pressure is real to buy a house. First of all, acknowledge that it is peer pressure. It's something that you see your friends and family. Again, we're talking about environment, right? Or people around us started to have families, started to have homes. I should do that too. That is totally normal. Secondly, it is situational and contextual. Depends on whether you can afford it or not. Put that all aside. But calculations-wise, look if it makes sense. I love where I'm staying right now and I'm renting and I'm paying 1,200 ringgit a month. And I calculated if I were to buy the place and pay mortgage, I would pay at least 1,600, 1,700 a month, which I could invest, which I could start a business, which I can do something else. So it is totally okay to rent until you find a place or a person that you fell in love with and want to be rooted. But until then, it's completely okay to rent.
No, I really share that thought too, because a lot of people assume home ownership is a must to do, right? And it's only a must to do if you feel, if it makes you feel better, right? And then you've got to really think about what do you want from your home, right? So, to the question, I love that question because it goes down to the core of behavioral finance, which is, do I feel good doing it versus am I making money or losing money doing it? I think first question you got to ask yourself is, are you buying for staying or investing, right? If you're buying for staying, then it's a lot of that emotive behavioral finance that you find, which is, I want a place that I can call my own, that makes me feel good, that might make me more confident, be able to earn money, save money, be more disciplined, and it could be a good thing to do. And if that for 30 years via that home loan is the way to do it, is the only way to do it, then go ahead and do it, right? Because that's the kind of thing that you want, right? Rather than you're forced to want. But if you're going around and saying, okay, I want to buy a property or home because I want to make investments, then you've got to see it as that and not mix up the two, right? And not confuse the two. Okay, if it's an investment, it's an investment. You've got to, do exactly what Suraya says, which is look around, find a place that you think makes sense there, do your numbers, right? And see if that home loan that is you mentioned 30-year debt, right? Don't forget you have an asset against that debt, so it should be okay. But you've got to do your numbers. And keep in mind that if you're doing this rather than any other expensive loans, it's probably the right thing to do. Meaning, do not get a short but very expensive loan instead of a long but cheap home loan, because typically that short expensive loan is going to cost you more for that same time period. So just keep that in mind, which is home loans are frequently the cheapest form of debt in any society, but particularly so in Malaysia too.
And maybe scare you a little bit. I think during this especially now that moratorium ended and all, a lot of people are facing difficulty repaying their home installment. So when we go to a beautiful place, especially like the showrooms, oh, so nice. You think to yourself, oh wow, amazing, like place to live, place to eat. But there's this other type of reality where that fantasy quickly can turn to nightmare. So with homes, if it's not a yes, it's a no for me.
Okay. Yeah. No. As in, it's a big commitment, right? So you've got to really, really want it. / really, really get prepared for it.
My turn?
Yeah, go for it.
Please share practical tips, what and how, do's and don'ts on money management moving into new norm.
Ooh, this is a very, very broad, big question.
Yes.
Okay.
Give me your best.
If you take nothing from this session today, I hope just 3 things, and hopefully these 3 things should help, regardless of what situation, what new normal. We're not even sure what a new normal looks like, but hopefully these 3 things help. In terms of money management, right? The first is pay yourself first, or pay yourself also. So a lot of people, what a lot of people do is when they think about savings, is okay, I'll live my life and then I'll save whatever is left, right? Which is fine, and if you are able to do that. But what a lot of people end up doing is that they forget that there's a lot of expenses which you can't see on a month-to-month basis, and then they end up not having much savings because those big yearly things get in the way, right? The holidays, the car insurance payments, the stuff that comes once a year. So for me, the best tip in terms of it will automatically help you manage your money better, especially when it comes to savings, is treat yourself like a Netflix bill, right? You pay Netflix, for example. I pay Netflix, right? It's like $50 a month, right? And it's my kind of like my vice. I like to watch Netflix, right? And the Netflix bill payment goes out on time every month, right? So if nothing else, treat yourself like Netflix, or Astro, or your telco bill, whatever your vice is.
Whichever is automatic.
Whichever is something that you go like, well, I pay for it, right? Like it's just something that you do anyway. Treat your future like something that you do anyway. So set up a direct debit to a locked away savings account or a locked away diversified investment portfolio, and just forget about it. Just like you forget about your Netflix payment, or your Astro payment or whatever, or your utility bill, and that will immediately put you on a better path versus previously. The second is, in terms of money management, is when you're budgeting, right, and figuring out how much of that, how much should I pay myself, essentially, or pay my savings account, is don't forget about the yearly things. A lot of people do a budget. It's very easy to do a monthly budget, right? Which is I earn X, I spend this on petrol, on parking, on my car installments, my home installments. Okay, I should have Y at the end of the month. Most people forget about the yearly stuff. So when you're doing your budgeting, top tip, don't forget the yearly stuff. Divide it by 12 and add it to your monthly budgeting. And the last, I guess, particularly important for younger people is start early 50-20 rule. I don't know if many people are familiar with that, but basically, if you're able to save 50 ringgit a day for 20 years, you will be a millionaire. So it doesn't matter who you are, right? You can be, like I said, that CEO, a student, gig worker. If you're able to save 50 ringgit a day, does not sound like a lot when you put it down that way. You will be a millionaire in 20 years with a diversified long-term portfolio. So for me, just those 3 things. Hopefully that helps you with saving, budgeting, and investing.
Very, very practical. I like all that. In addition to that, okay, putting on my communications background here, it is extremely practical if you also learn how marketing and psychology works. Behavioral science is a big indication of how a person behaves with money management. And I'll give you one very simple example here. No matter how diligent you are with saving money all your life for years, right? It only takes one scammer to find you at your most vulnerable moment and all your savings are gone. And this has happened to countless people right now. And it's extremely sad. Another example that I can share with you right now are some people, they are naturally more friendlier than others. They find it hard to say no to themselves, to other people. You are an amazing person to be around with. You are the glue to your friendship groups. You do everything, you organize everything. You like having harmony. And women tend to be these figures. But when there are people who want to take advantage of you, can you lend me money? Can you co-sign this with me? Can you give me this or that? Can you sign this away? and people take advantage of you. It doesn't matter if you're diligent, but when you do this, if you accidentally fell for these things, then it is quite hard to dig yourself back out of it, but not impossible, but it is hard. So when I say marketing, there are whole industries out there, billion-dollar industries, sales and marketing agencies. They are trained to find out, to use your psychology against you to find out what are your spending triggers, how can they get you to say yes. So it is up to you to put up your defenses and learn how to say no. So
I love that tip so much, right? Because it goes at the heart of what I believe, which is it should be your life, right? And you mentioned billions of companies, billions of ringgit out there. Their job is to take money from you in exchange for their product. Your job is to make it as hard as possible for that to happen, right? And to go, okay, look, I'm willing to part you with my money for this thing, but only because I want to, not because you want me to. I love that very much. That's a very empowering message. Okay, your turn. Next question.
yeah.
Next question. Okay, here we go. Okay, the big one. Since the moratorium has been extended, and since moratorium has been extended, okay, we'll go into what that means later. And the first repayment will be end of October. I think he means since the moratorium is not been extended, the blanket moratorium at least. Is it advisable to pay off the deferred interest payments in the next 3 months? Or should I just pay as per usual according to my installment plan? So talking about moratorium, now that it's over, I'm thinking of what to pay. Should I just pay it all off right now, or should I just go as per what the bank planned for us?
What I have seen people share, mathematically speaking, it makes more sense for you to pay as per your usual schedule, but I would like to hear what the CFP have to say.
I think this, CFP, I think it's more about the mathematics, like you said, right? Which is, if you've been able to build up emergency savings, right? And now you're thinking of using it all up to pay for this installment, then you've basically not built that up, right? So you need to think about that, right? Which is, and treat these installments that you're deferring as the cost of that build up, right? That cost me a little bit, yes, but at least I have this emergency savings now. Does it make sense for me to give it all up and pay this whole 3 to 6 months straight away and give that all up that I've been working towards? So that's the question for you. But there's no kind of fixed answer. It's really about what loans you do have. So for example, if you have very expensive loans, credit cards, personal loans, that have been deferred and you feel like, okay, actually I can pay it off now, go ahead and pay them off because they're typically more expensive than a home loan or a car loan, right? So that's what I would say, which is have a look at the exact numbers. You don't have to do it all. You can do some. So for example, I can start paying off my personal loan all that whole 6 months today, and as well as my credit card that whole 6 months today. And maybe I might want to just not do that for my home loan and personal loan because the interest rates are lower, right? So it's up to you, but I'll go from kind of most expensive to cheapest. Hope that makes sense.
No, that's perfect.
Yeah, cool.
Next one. All right. What should I do if my MRRT application is rejected? Should buy a personal accident plan is enough? Maybe we should start this by asking what is MRRT, by explaining what is MRRT.
Sure. I love this question too, and I'll certainly remember to ask this of the insurance guys on Friday too. But MRRT stands for Mortgage Reducing Term Takaful, which is a insurance policy which you take alongside your home loan, and as your home loan balances reduce, the coverage on that policy reduces as well. And the purpose of this policy is, in the event that anything happens to you and you have a home loan, anything meaning bad things, death, disability, disease, injury, that causes you to not be able to pay back your home loan, the insurance company will pay off that for you, such that either your family or dependents don't get burdened with this new home loan. They have to sell the house because they can no longer afford those installment payments. Worst thing to do, you've lost your breadwinner and now you have to sell your house. So that these policies exist for that reason. So for the person who says, I don't qualify, or I didn't manage to get it. Is it?
Yeah. Should they continue?
Yeah. I think the key is to figure out what was that for, and to try to replicate it, because that is a genuine concern for people, right? Which is, imagine you've lost your breadwinner of the household, you've lost that income, you're no longer able to service those home loans, you've got to now sell your house to settle that home loan. Trying to avoid that situation. How do you avoid that? Kind of create for yourself your own MRRT, right? Get family takaful with the amounts that kind of makes sense to the home loan payment. So if anything happens to you as the sole breadwinner or income earner, right, you get that nice payout to pay off your home loan, and you're sorted, right? Well, you're not personally sorted, but at least from a money perspective, you're sorted. And I think you don't have to just get MRRT. You can create it yourself. Life, PA with life with TPD, total permanent disability, PA, personal accident, and even CI, critical illness. If you get a really bad disease, you can't work, you can't earn, you get a big sum, pay off your home loan. So that's what I think.
Yes, what he said.
Okay, next question.
We do one more before we move on to Slido, yeah?
Yeah, I think we've got some more time, for maybe one or two more questions before we take the live questions from you, the audience.
Make sure to put in your questions there.
Okay, this one is a nice one, which is to do about gambling and credit cards. So this person has a friend who is a former gambler who's accumulated credit card debt to 6 figures. He has a stable job, but he's totally clueless on how to rebound from this situation. No other assets, and his take-home pay can only pay the minimum amount of each credit card. What's the best way to deal with this situation? How long does it usually take to be able to pay back all his debts and finally save some money for his future?
If you go back to the standard answer, that would be, just do it, just pay it off, just dig yourself back out of it. But I'm also aware that gambling is an addiction. And with all addictions, you need proper care, proper step-by-step plan of overcoming that before all other aspects in your life, including financial, gets improved. It really depends on people to people, but I would say people who really do have addiction in every sense of the word, therapy is something you should definitely consider. I have heard of gambling anonymous groups, I've seen them on Reddit, I've seen online communities, people who basically encourage each other to motivate, to help each other not remove the addiction from their lives. So they have that support group going on, and then they also have from therapy or from other professionals who can help them do a suitable method. It's either cold turkey or much like cigarette, nicotine, or like any other drugs, right? Like either like a slow gradual withdrawal or like cold turkey, whichever that works for the individual. But at this point, I would say, aside from the practical financial side, take care of the addiction part of it.
Yeah. No, I love that very much, because the credit card debt is actually not the main problem. It's a symptom of the problem, right? And if you don't solve the actual problem, you can try and solve this, but then you keep coming back. So that's really practical advice. I like that very much. In terms of the money stuff, paying the minimum for a credit card typically means you'll be taking at least 2 or 3 years to completely pay it off. And that's expensive, especially when credit card debt, as we said earlier, is in the teens, right? So for me, the key there is to do the same thing which I said earlier, which is talk to these credit card companies, not threaten them, but persuade them to offer you persuade them to offer you a much better deal than that 12 to 15%, right? Say, hey, look, I'm already your customer, right? Do me something better. Otherwise, I'm taking it to that next credit card company to do me something better. And I know they can, because our team does all kinds of analysis of these kind of loan to pay off a loan stuff. And loan to pay off a loan stuff doesn't sound very positive. Doesn't sound very positive to get a loan to pay off your existing loan. But if that new loan is at a much lower rate, it does make sense, right? So if you're getting a new loan at 5, 6, 7% versus paying off, struggling to pay off the whole minimum on 12 to 18%, do that. So, but I agree, Suraya, fix the core problem first rather than just the symptom. which is fix the gambling issue, then the financial issue.
Let's take on some questions from Slido, shall we?
Yeah, I think we're just about out of time for the bowl. We'll try and answer this offline or on Friday. But let's now get down to the question that you've been asking us over the last hour or so, and get straight down to it and pick up some questions. We'll be doing in both English and Malay, so no issue. Keep them coming. We'll answer as many as we can in the next kind of 15 minutes or so. Let's get to it. First question. I'm not rich, category B40. Income lebih penting sekarang, bukan financial literacy. Apa pendapat anda?
Okay.
Suraya?
Okay, I will try answer. Saya jawab bahasa Melayu sebab soalan dapat dalam bahasa Melayu. Kalau you dapatkan jawapan daripada luar, dia akan cakap dengan you, carilah kerja yang lagi tinggi, carilah ini, carilah itu. Tapi saya tahu dia akan cakap dalam masa yang sama, you kena hati-hati sebab dalam masa yang sama, dalam semua keadaan yang you nak mencari semua ni, you kena hati-hati sebab dia akan buat you rasa you malu dengan keadaan you. Saya rasa itu penting nak cakap sekarang. Kalau cakap pasal tips duit kan, bukan tak ada tau, banyak dekat luar tu, tapi banyak cara dia cakap dia macam almost macam talk down sikit. So you kena cari guru yang sesuai lah, senang cakap. Cari orang yang tak buat you rasa macam apa I buat pun semuanya tak elok, tak cukup. Cuba avoid orang-orang macam tu. Cari keadaan, kita cakap pasal environment tadi kan, cari keadaan yang lebih positif, yang lebih motivate you untuk cari lagi banyak duit, buat saving dengan lebih cekap, cari keadaan yang lebih positif untuk you.
I love that answer actually, and I think it goes down to I know, and thanks for the question, because it's actually very brave to ask these questions, and continue being brave in your search, right? And for me, I'll give you a statistic that we found in our literacy survey, which is financial literacy is not down to income, meaning we have people with very low financial literacy who earn a lot of income. So if you imagine, I give you a picture, which is a bathtub which you forgot to sumbat, right? So you're trying to fill your bathtub, right, with more income, but if your literacy remains low, you're not going to fill your bathtub because you forgot to plug that plug the hole to ensure your bath fills up. So think about it this way, right? You're going to get income. You're right. It is more important to increase your income. Go ahead and do it. But keep in mind to sumbat your bathtub, which is get your financial literacy in order, meaning increase that literacy. Like Suraya said, lots of resources out there. Go with somebody you feel doesn't make you feel negative about your own situation. And I promise you'll see that kind of water level start going up in your life. So hopefully that helps.
The next one.
Okay.
How to create awareness among your friends who doesn't take seriously on financial management. May I take a stab at this?
You go for this one, I think.
Okay. Real talk. What they do is none of your business. Focus on your own self before you help on other people. Sometimes I see, what my friend do this, they're not good at that, they're spending money on this, they have credit card level that. It doesn't matter. Focus on you. If you really want to be a good example, then you adopt good practices in your life and lead by example. Be the person who suggests to do cheap activities, for example. Be the person who, talks about financial matters among your friend group. If they do a bad decision, don't shame them. Be that person who creates that positive environment that we were talking about. But again, what people do with their money is none of your business.
Yeah. No, I completely agree, Suraya. It's the best way to create awareness is to inspire rather than instigate, right? Which is, I'm not saying be like Suraya, but the way Suraya, so for example, what Suraya is describing is somebody who inspires others through their management of money, rather than instigates people to do certain things with their money, right? Inspire people with your own management, and you'll be surprised how much awareness you create. Cool. Next one. Next one is for both of us, I guess. Hi, Hann and Suraya. Can I please get some thoughts on debt consolidation loans? If it's wise, is it good to loan just enough or more to have cash in hand? Thank you. Oh, slightly complicated question. I'll try to go for this one, and then Suraya just add in at the end. I mentioned this word a couple of times in the last hour, so I guess that must have led to the question, which is, if you've got expensive loans, so what I mean by expensive loans, loans at 10%, 12%, 15%, typically credit cards, sometimes very expensive personal loans, right? Consolidating them into a bigger loan sounds scary, but if it's cheaper, you save money in the long term, right? Now, the question is also, should I just do enough to cover those things and then and just enough to cover those loans and then pay them off over time? Or should I get a bigger one and get a little bit more money for myself? I think it's down to you, right? I wouldn't recommend it because it goes back to the question of why you're getting a loan to cover loans. You can do that if it's cheaper, but it's still not cheap. Meaning, you're still paying that 4, 5, 6, 7, 8% versus 12% fair. But keep in mind that if you're doing it for consumption, then you're having to pay interest for things that you want to spend. So unless you're in dire need of that cash today, maybe because you don't have an emergency fund and you would like to have a little bit, go ahead. Otherwise, just keep that in mind that it's cheaper, not cheap.
Short add-on to that. Sometime back, I asked the Ringgit community about what they would do if they need money urgently. And some members have shared the many ways they have tried to raise funds before they turn to loans or in addition to loans. So what this does is they are trying many methods, including doubling down on their services, side business, doing Grab, asking friends and family, like good friends and family, before they turn to the last and final option, which is loan. And even if they turn to loan, that they don't take the big sum that they originally planned, they don't take like 50K, they maybe just take 5K just to settle the balance, right? Yeah. So it's a combination of effort that you put into doing what you can before you find this. Loan is not a magic solution. Like what Han said, you're just replacing one problem for another.
Yep. Yeah. No, absolutely. It's a smaller problem, but it doesn't mean it's not a problem, right? So that's the key thing. Okay, I love this one. This next one is, what's your biggest financial mistake? Sorry, you take this one before.
Oh, shall I?
Yeah.
Okay. In terms of mistakes, I have a lot. I don't have regrets, but one that I do want to share here, and especially because you probably, I'm guessing people who tune in, love financial stuff, so you probably get a lot of these advertisements. I have lost money from Forex before. And this particular Forex platform says that, it's so easy, you should deposit your money and then you can copy somebody else's trade, and then their trades get like 100%, 200%, 1000% profit, and look how easily you can make money. I'm telling you, those are lies. Okay? So that is one of the financial mistakes I've made. I didn't lose a lot, but enough to tell you that I made that mistake and I will never do it again after this.
Okay, I've got a not so exciting one. Mine is, I made a mistake in my younger days on stock picking without the relevant training to do so. So, stock investment, specific shares, for example, is a very, very large industry, right, with lots of very, very educated people. Educated is not the right word to use. Very, very exposed people who do it day in and day out. They know a lot about how to do specific stock picking and stock investing. Me in my younger days thought, I'm a smart guy. I should be able to do it. So I went into various stocks which I thought were good because maybe I liked the product that they were selling. McDonald's, Domino's of the world. Thinking, okay, look, I know this company, and for me it was making stock investments without being a stock analyst, right? And these things exist for a reason, right? It was like me trying to. It's like me trying to bake a cake without knowing as much about baking cake as these expert home bakers now, right? And trust me, if you ask me to bake a cake, it would completely fail. Likewise, just because I'm a smart person doesn't mean I know how to pick stocks, and that's why the industry exists. So for any kind of amateur or kind of non-stock picker, I have a day job, right? I don't trade stocks in my day job. It's important. The lessons I learned from that mistake was you can't beat these guys over the long term, right? You might as well go with something which everybody knows works, which is long-term diversified investments, right? Which in 20 years will make you rich, right? If you just follow the science, you won't go wrong. Versus having a chance of losing it all with a bad stock pick. So that's kind of my biggest mistake. It was. I think the stock was. I can't remember what it was now. As in, I learned from it. But I intentionally forgot what stock it was.
You deleted that part of your brain.
The one. I just remember. Okay, learn from this mistake, but please let's not revisit it anymore.
Yeah. But if you do, I want to plug. If you do want to learn about like stock picking, Bursa Malaysia has this amazing platform called MLP, Mirror, Learn and Trade, and inside there are professional stocks analysts. I don't remember what they are. Yeah, but they are professionals who are employed in fund management companies, right? And you can see how they trade, what they buy, what is the justification behind their purchase. You get to see the different types of analysis, fundamental, technical, and you can really see it's much harder than just like pick and hope it will go well, right? There's so many strategies involved. So go in, especially if you are overconfident. Then for me personally, I went in there, I thought, Suraya, you know finance already. Go in there, felt like a loser.
Humble yourself, basically.
Go in there and humble yourself. Go eat your humble pie there.
I love that so much. Okay, next question. Given in such time, COVID-19, how should we manage our money and prepare for the next emergency? Very, very relevant topic.
Okay, do you want to take this one first?
I'll take this one first, which is the big lesson that most people hopefully learned in the last kind of 6 to 7 months is that people who had an emergency fund felt a lot more confident about the prospect of going through this crisis than people who did not. So if you haven't had one yet, the number one thing to learn, prepare the emergency fund today, right? The next emergency happens, you sit there going, okay, I've got this thing, how long can it last me? That means I can weather it. I can weather this emergency for at least the first few months. And that gives you a lot of confidence. And it's not just an emotional thing, it's also a practical thing. You won't be going out looking for kind of emergency solutions, which may cost you more in the long term. So that's kind of the one top tip. Obviously, there are plenty on how to manage this, but that's the one I would say.
Yes, absolutely right. Adding on one little thing, stop looking for that one particular tip that will magically change your life. I think a lot of people are looking for this, and maybe to a certain extent, I keep looking for it as well. But they are tried and tested and true methods. They are tried and tested and true for a reason. Follow those first before you find
the
magical solution from random people without legitimacy that are just trying to sell you courses or like easy money or like easy solutions. Focus on what is already established. Stop looking for magic.
Okay, one more question. Next question, how do I psycho myself not to spend unnecessary stuff, especially with online shopping? Okay, Suraya, you got to take this one.
I will take this one. Okay, reduce your temptations is the primary thing. And for me, that means, first and foremost, unsubscribe for all the marketing emails. Don't unsubscribe to Ringgit Plus, this one very good. Even though you do have to be careful about the credit card stuff. And then you unsubscribe from the notifications from the apps that you have, right? Including all the e-wallets, a lot of them do collaborations, like unsubscribe to all those notifications, like turn it off. And the third one would be careful of who you follow online, especially people who flashes wealth without disclosing the source, right? They will make you feel, this has many aspects to it, but for one of the reasons why this is a whole industry is because following these people will create desire that you don't necessarily have in the first place, and you can eliminate it, but you can reduce it.
I like that so much. Cancel your notifications. I've got one which is, it's hard to tell what is a need and want. And a lot of people say, oh, don't buy what you just want. You got to buy only what you need. But honestly, even as a consumer itself, it's hard to tell. Sometimes I know I feel like I need it, but actually I just want it. The tip I use there is two things, which is time. Use time as a benchmark. If you still want something today and you say, okay, look, tell you what, we're going to spend the next week and think about it. I'm going to figure out next week whether I still want it or need it, right? And so you give yourself that 1 week rule, or 2 week rule, or however many week rule you want, right? And go like, look, I'm going to buy it for sure, don't worry, satisfy your urges, but let me give it 1 week to think about it, right? And in that 1 week, you really start realizing what is a need and what is a want. So,
you know what I have recently discovered? There are people online who say things like, biar menyesal beli dari menyesal tak beli. They actually do say that. And this is your environment. You might just repeat what your parents said or what your friends said, right? But please recognize that this is not a good example of delayed gratification. For me personally, I kind of enjoy that pain that comes with delaying. Just kind of like a personal competition with myself. Like, how long can I wait until I give in, almost? It doesn't always work, but every effort counts.
Yeah, no, agree. So for example, 11/11 is coming up. You're going to get bombarded with lots of messages about buying things. So what I'd say is bombard yourself today, right? We're 2 weeks out, bombard yourself today. Figure out what you want today, what you need or what you want. Just have a whole list, but communicate to yourself. Don't buy today. And here's a good reason why not to, because you're going to get those deals on 11/11, right? So, but I can promise you, within the next 2 weeks, you will really start figuring out what you actually wanted and what you actually need. So that's totally in line with Suraya here, which is, for her, she's a little bit more sadistic in that she likes to make. You said you enjoy.
I enjoy the pain.
You enjoy the pain. Okay. But I'm just saying that pain actually is real. There's a science behind that, which is time actually makes you realize what you want and what you need. So it's very easy to just tell you don't buy it, right? But sometimes you just really want it. Time helps, right? Not your parents or a financial guru telling you to not do things.
Sometimes you forget as well that you wanted it in the first place. So that happens to me.
Yeah.
Next one. How to talk to your parents about money management?
Good question.
Your questions today very
very pointed questions. Okay.
Yes.
I think if you ask Suraya, I guess you can answer, but it's technically somewhat your business, this one, because your parents are family and there is some financial link, at least legally. I'd say it depends on what you mean by that. If you're coming from the angle of I need my parents to help me, right? Just ask, right? They're your parents. They're supposed to help you, right? But if you're going from a point of I can see my parents making financial management mistakes, and I need to start talking to them about it, I think it becomes a very sensitive topic, right? Because technically, they've managed to get you to where you are, so they've managed their money well enough for that to happen in their defense. But for me, it's all about exposing to the concepts rather than your specific opinions, right? If you expose not just your parents, anybody, to concepts, for example, like what does it mean to have a smart budgeting? What does it mean to start saving without imposing specific opinions first? I find that helps, which is, hey, let's talk about something, right? Which is, I saw something interesting that day, which was this article on how this person is able to live financially free or whatever that situation may be. Talking about something which is not necessarily just your opinion tends to help. That's my opinion.
Yes, and I think this is where the whole behavior things come to play, and obviously it is very sensitive because it's your own family member. I do kind of read up on personality tests and try to figure out what type of personality my parents have. I definitely know for sure that my mom is the saver one in the relationship and my dad is the spender. That one I know already. I also know that my dad is somewhat like a rebel. Like if you tell him to do something, he doesn't want to do it because you told him, right? So be aware of these cues in their personality and try and respond according to what works with your own, I guess, communication style. But in extreme cases, I've had one person who said that his father has a problem of borrowing money from Along, and that's just the trickiest, and the children can't make him stop. That is a whole other situation altogether. You might want to do, it's a family meeting already. If you are the type of family that already talks about these things openly, then it's easier. But if it's always kind of like hidden, or shame, then might be a bit harder. Ultimately, you know your family best. We'll leave it at that.
Yeah, sound advice. Okay, we've got some more time. Let's try and cover a couple more questions from the audience. How did you discuss with your future spouse on financial arrangement for life after marriage? Suraya?
Personally, we did a whole YouTube video about it. No, but it comes up. I cannot shut up about personal finance, so he listens.
I mean, for me, it was, as in, it's a very personal question, right? So for me, we wanted money out of the way, right? The key with that is saying, okay, look, we got to talk about this because we don't want it to be part of, we don't want it to disrupt our marriage at all. So let's just talk about it now and settle it. And there is no right answer. The key is to just go, look, I'm going to talk about it with the viewpoint that there's no right answer of, okay, we should have half the money spent for expenses, or you cover everything, I cover everything. There is no should or would, or there's no should, right? There's no right answer. There's only a right answer for your specific marriage. But the key is to approach it with that in mind and go like, look guys, not guys. Between the two of us, there's no right answer, but we need to talk about it because I don't want to worry about it being an issue when we get married, right? So for us, that's the approach I took, and it was very useful because we agreed that we should share as much expenses as we can. What happens, and then we start talking about scenarios. What happens if my income is higher than yours? What happens if you don't have income and I have income? So that those situations which they may occur in your marriage, when they happen, you've already talked about it without the stigma of it happening already. So for me, play out those scenarios. It might be fun also to start playing out those scenarios. And again, there is no right answer. It's your marriage, not mine.
Maybe it is easier for us because like money, personal finance is part of our life already. But for people who truly have never talked about it, I can recommend, there are a profession out there called financial therapists. And what they do is they give out tips, the intersection between relationship and finance. There are articles and podcasts about the subject of bringing up the topic itself, if that is an issue for you. So look for those advice on how to, even the process of bringing up. It's baby steps if you've never talked about it before.
Cool.
Yeah.
You want to take this last question?
We
have no time. I think we have enough time for a final question. Last one.
Yeah.
How do you strike a balance between savings and investment?
What balance? Well, I have savings in my personal bank account. In my business bank account, I have about 3 months worth of expenses for my business. For my personal expenses, I try to keep it lean as much as possible. I like feeling broke. And then chuck everything to investments. As and when, sometimes, when cash flow is an issue, I do make decisions of like withdrawing a little bit here and there. But my default is to keep my personal account low and chuck everything else to investments.
Okay. My mindset on this is not too far away from yours, Suraya, with a slight difference, which is I keep as much savings as is needed, not to have to disrupt my investment portfolio. Meaning, I have an investment plan. I am a financial planner, but if you speak to your financial planner, you'll get one, or you build it yourself, it's fine. Have an investment plan. Usually these things are long-term. They should be long-term, right? Which means you should have enough savings that you can, address emergencies. You can address what you mentioned, specific cash flow things, without having to remove things from your investment portfolio ahead of time, because that tends to disrupt your investment portfolio, right? It tends to disrupt your investment outcomes. So for me, that's the kind of thing that I'll do, which is have enough savings to not ever disrupt your investment portfolio. So just go to that point and then stop, and then, like you said, chuck everything else into investment portfolios. So that's what I think. Okay, I mean the time's up now. Thanks so much for joining us today. Hopefully we've been able to answer many of your questions. If we weren't able to, tweet Suraya. She's at Suraya ROR. I'll tweet myself, OIHANN, Oihan. We'll answer your questions right there as well. But I mean, today has been really interesting for me because we've been able to really answer specific things that people have in mind. And hopefully that's been helpful to you. But before we end, maybe Suraya, a couple of final words, last minute tips. No magic ones, but last minute tips for our audience.
Okay, as if you remember, one thing from this whole thing is environment matters a lot. A lot of the advice or tips out there forgot about the behavior part of financial management. So focus on behavior, focus on environment. How can you have the most growth mindset that you possibly can? And then use that to implement all the financial tips that you can get everywhere else. So focus on behavior.
Okay, I guess last one from me before we pass back to Lisa is, look, like it's a very troubling time for everybody, but I think one of the key message hopefully is empowerment, right? Like you mentioned behavior, but I'll say, look, it's your money, it's your life, take control of it, it's yours. And I'll leave you with kind of a summary of everything we talked about, right? Which is on the debt side, it seems that many of you have questions on debt. The couple of things to note is that cheaper is always better, right? Cheaper meaning lower interest, right? So if you're stuck on a high interest debt, move it to a lower one. You already have a bank, talk to them. Second is if you're worried about crises, build up an emergency fund towards this one or the next crisis, right? Build it up. I've shared a couple of things of how to do that. Pay yourself first, put it locked away, don't look at it until it's built up. And third is when you're investing, don't go chasing waterfalls. Don't go chasing returns. There is a true tried and tested way for you to get rich, right? And it's unfortunately get rich slow, which is long-term diversified investment portfolios, which will return you, over time, right? So hopefully those three things you leave from me, it will leave to you in this webinar. But thanks so much, Suraya, for joining us today, joining me in our chat today. If you got any more questions, we're happy to answer, not just on Twitter, but just shoot us through. And if you have any feedback for the team in the Financial Education Network, just scan the QR code. I think it's on this side, actually. And leave your feedback. We'd love to make these webinars better than they are already, hopefully. And do join us again for the next session, Friday morning, 11 a.m., same time, same place, right here on the live stream. And shoot any questions you have before then or during the session as well. Till then, I'm Han, that's Suraya. Back to you, Lisa.
Thank you, Han and Suraya, for the very engaging session today. I would also like to thank all of you who have taken the time to participate in this webinar. We hope that most of your burning questions on how to manage your personal finances, especially in these very challenging times, have been answered. And as we had an overwhelming number of questions posed to Han and Suraya, they will attempt to answer as many as they possibly can on their respective personal social media platforms. Ladies and gentlemen, that brings us to the end of the session today. I would like to reiterate again, you can catch us again for our last series of webinar titled #YOLO, but your cover is low, Insurance and Takaful for Youth, this Friday, 30th October at 11 a.m. For those who missed out the earlier session, the first webinar titled #BePrudent, Take Control of Your Finances, don't worry, you can still watch the recording at livestream.com/BNM/BePrudent. Before we close, just a gentle reminder again to fill up the feedback form at www.fenetwork.my/feedback for future improvements. Thank you everyone and have a very good day ahead.